Hello, today we're going to talk about managerial accounting chapter, which is chapter 25. It's about short-term business decisions. We're going to talk about regular pricing in this video. Now, the company might be a price taker or a price setter for a product, but how can we decide if we are a price taker or price setter? If I have control over the market, so I'm selling something differentiated, I'm gonna be price setter. But if I don't have control over the market and I cannot set my own sales price, I need to follow the competitor sales price. Okay, and if there is competition in the market, I'm gonna be price taker. Okay, so now if you have control over the market, you're gonna be price setter, so you're gonna use cost plus pricing approach. We're gonna explain this one later on. And if I don't have control over the market, I'm not selling something unique, okay, and I need to take the competitor's sales price, I'm gonna be price taker, so I'm gonna use target pricing approach. Now what's the difference between the two? If I am a price taker, okay, I'm gonna use target pricing, so it's gonna be sales less cost equals profit or target profit. Now the sales will be the competitor sales price. The profit will be the target profit decided by the investors. Okay, so with the target pricing, you're gonna decide the cost. This one will be your X, because you need to decrease your cost as much as you can to achieve your target profit. While if you are price setter, so you set your own sales price. So again, your formula is sales less cost equals profit. If you are using cost plus pricing, you're gonna decide the sales price. This is your X in this case. Okay, the cost is the current cost you are paying, and profit it's the target that is decided by the investors. So you need to decide your sales price. Okay, why it's cost plus? Cost plus, because to solve for X, you need to add cost to profit. That's why it's cost plus profit. Fantabulous Products sells 2,000 kayaks per year. So this is the number of units per year at a price of $4.50 per unit. So this is the sales price. Fantabulous sells in a highly competitive market. So since it's competitive market, so I'm not gonna be a price setter, I'm gonna be price taker. Okay, I'm gonna be a price taker. So I'm gonna use target pricing in this case. The company has 1 million of assets, so this is my amount of assets, and the shareholders wish to make a profit of 18% on assets. So this is my target profit. It's 18% on 1 million assets. Fixed costs are 500,000 per year. So this is my fixed cost per year as total and cannot be reduced. How much is the target variable cost? Okay. So I'm a price taker. I'm gonna use target pricing. So if I'm a price taker, I'm gonna sell at my competitor sales price. So sales less cost equals target profit. Okay, so here the sales price is $4.50 per unit. Here, $4.50 per unit. How many units do I sell per year? I sell 2,000 kayaks. So to find total sales, I need to multiply 450 by 2000. Okay, and it's gonna be $900,000. Cost will be X. Profit is the target profit, which is here 18% on assets, which is $1 million. So I need to find 18% of 1 million assets. So it's gonna be 180,000. So to solve for X, 900,000 less X equals 180. So what's gonna be X in this case? So 900,000 less X equals 180,000. So to solve for X, I'm gonna transfer 180 here and X to this side. So X will be 900,000 less 180,000. So it's gonna be 720. Okay. Now 720 includes variable and fixed together. Okay. So this is fixed cost plus variable cost. In this question, he gave you the fixed cost here. It's gonna be 500,000 per year. Okay. So fixed cost is 500,000. So what's gonna be the variable? It's gonna be 720,000 less 500,000. So it's gonna be 220,000. So in this question, he is asking for the target variable cost. It's gonna be $220,000 as total. What if he asked about the per unit? So I need to divide 220,000 by 2,000 kayaks to get the variable cost per kayak. Okay, so if I want to find variable cost per unit, I'm gonna divide 220,000 by 2,000 kayaks. Okay, so it's gonna be $110. So if he's asking for variable cost as total, the answer will be 220,000. And if he's asking about variable cost per unit, the answer will be 110 per unit. Hilltop Golf course is planning for the coming season. Investors would like to earn 15% return on the company's 60 million of assets. So 15% return, this is my target profit. It's 15% on 60 million assets. The company primarily incurs fixed costs to groom the greens and fairways. Fixed costs are projected to be 30 million for the golfing season. So this is my fixed cost. About 600,000 rounds of golf are expected to be played each year. So this is the number of units here, 600,000 rounds. Variable costs are about $15 per round. Hilltop Golf Course has a favorable reputation in the area. Okay, therefore has some control over the price. So I have some control, so I'm gonna be price setter in this case. I have control, so I'm gonna be price setter. If I'm a price setter, I'm gonna use cost plus pricing. Using a cost plus pricing approach, what price should Hilltop Golf charge for a round of golf to achieve the desired profit? So he is asking about the sales price. Okay, so again, the formula is sales less cost equals profit or target profit. Now X is sales. Cost includes two things: fixed cost and variable cost. Fixed cost, it's here, 30 million. This is the fixed cost, it's 30 million. And variable cost, it's $15 per round of golf. So I need to multiply 15 with number of rounds, which is 600,000 rounds. So for the fixed cost, it's 30 million. For the variable cost, I need to multiply 15 with 600,000 rounds. So it's going to be 9 million. Target profit is 15% on 60 million assets. So 15% times 60 million assets. It's going to be also 9 million. Now the formula is X less cost, which is fixed cost and variable cost. So 30 and 9, it's going to be 39 million. This is my total cost, equals target profit, which is 9 million. So now to solve for X, I need to transfer the 39 to this side, so it's going to become positive number. So cost plus, so it's going to be cost plus profit. 39 plus 9 million. It's going to be 48 million. So this is my total sales. Okay, I need the price per round. Okay, because he said price for a round of golf. Okay, so he's not asking for the total sales, he's asking only per round. So the sales price per round will be 48 million divided by number of rounds. How many rounds do we do per year? Okay, here it's 600,000 rounds of golf are expected to be played each year. So 48 million divided by 600,000 rounds. So it's gonna be $80 per round of golf. So this is the answer for this question. Thank you for watching. If you have any question, please leave a comment. Please like, share, and subscribe.